excited about what we'll be talking about because really of the changes that these particular things have endured over the past couple of years, and so that folks can really understand, why they've seen a change in your refund, right? Because it's a big conversation now. With that being said, I am the CEO of Brown's Advisory and Accounting Firm, and we are located in both Philadelphia and Atlanta. If you ever feel the need to reach out, it's info@brownsaaf.com, or you can visit our website where we have a few resources, www.brownsfca.com. Okay. Now, last week I talked about the earned income tax credit, which is somewhat a part of this week's conversation, but not as in depth, right? Because of the type of credits that I'm talking about. And it's important to know that the IRS's statistics, I have a trouble saying that word sometimes, has shown that refunds now are quite a bit lower than what it was in the past year or two, especially 2 years, right? So they're saying folks aren't getting as big of a refund as they are normally used to, all right, which is a part of our conversation today for you to understand why that's the case, okay? And for some reason, I have some charts again tonight that I want to share with you guys, really so that you guys can put things in perspective and see how the impact has flown over the last, let's say, 3 years. Right. So with that being said, this topic here today is child-related tax credits. Now, there are 4 child-related tax credits that are often contributors of refund for folks who are claiming a child on their tax return. And it usually produces the big bucks, if you will, right? And one of the big ones is the earned income tax credit, which I won't go in detail because I already talked about that last week. Okay, and then we have the child tax credit, we have the credit for other dependent, and the child independent care credit. So those last 3 is what we'll be talking about today. Okay, so let's kick things off by first understanding what refundable credit versus non-refundable credit means. I really want us to understand that in terms of these credits. Okay, now refundable has a fully refundable nature to it and a partially refundable nature. So when it's fully refundable, that means you can receive all of that amount in the form of a refund, cash in your bank account, check in the mail, that sort of thing. If it's partially refundable, it can do one of 2 things. It can reduce your tax liability and or increase your tax refund, right? And a portion of that could end up in your bank account in the form of a direct deposit, check, whichever you prefer. And then finally, we have the non-refundable portion, right? That's usually credits that you can't receive in the form of a refund. It can only reduce your tax liability and help to increase your tax refund, but you won't ever receive that in the form of an actual check, cash, if you will. Okay, so let's go ahead and start talking about these credits. The first one on the list, which I know a lot of people are talking about these days, so why not talk about it first? The first credit is the child tax credit. Now, the child tax credit has 2, perspective with it. There's eligibility from the child perspective and eligibility from the parent perspective. Okay, we're going to first start with a child and then we'll head into the parent because that's not as intense as a child. Now, for a child to be eligible on your tax return to receive this credit, that child has to be under the age of 17. Now, that's the first factor, age. They have to be under age 17 at the end of the last tax year. So in this case, it's the end of 2023. So if your child became 17 last year, you are going to see a change in your tax refund. Okay. And then relationship. That says, how are you related to the child? Are they your biological child, your stepchild, your foster child? Are they your siblings, whether that's half, full, or step, right? They can also be your niece or your nephew to be eligible for this credit. Okay, and then the third one here is support. Did you provide more than half of their support throughout the year? Did they, and I'm getting ahead of myself. The fourth piece is, did they live with you for more than half of the year, right? So the fifth piece here is, have you claimed them or you claiming them as a dependent on your tax return? So they can't show up somewhere else and you're not claiming them and you get this credit. Okay. And then the final piece here is they have to be either a US citizen or a resident. Okay. And they have to have a valid social security number. So these are the 6 factors you want to keep in mind. So if any of these are out of the norm, say, for example, they're not related to you by any way, you won't be eligible for this credit. If they have an ITIN, you won't be eligible for this credit, right? So those are the eligibility from the child perspective. From the parent perspective, the IRS is really just looking at 2 things. What is your adjusted gross income? Okay, so if you are single or head of household, your adjusted gross income needs to be 200,000 or less to be eligible for this credit. If it's greater than 200,000, then you begin to phase out. You get a portion of the credit, but just not all of it, right? And if you're married, filing joint, that amount becomes 400,000. So again, if it's less than 400,000, you're eligible. If the child is also eligible, but if it's 400,000 or more, then you see your eligibility begins to phase out. Okay, now this is a partially refundable credit and it's worth up to $2,000. When I say up to $2,000, I'm referring to the fact that there's a portion of it that is refundable, a portion that is non-refundable, and it shows up differently, or rather in different places on your tax return. Okay, so the full amount of this credit is $2,000. The portion that is refundable is $1,600. The portion that is non-refundable is $400. Now, they increased that rather slightly versus last year. And I know there's talks in Congress about increasing the child tax credit. Nothing has been passed yet. So we just pretty much have to go according to what we know to be true, which is what's currently in the tax code. Okay, now, what I also want us to do is go ahead and take our first peek at the little illustration that I have here. So a lot of folks, again, have complained about the fact that their refund hasn't been the same. A lot of people, quite frankly, aren't happy because it's not something that they're used to. So what's happening here is you're seeing from 2021, 2022, and in 2023. And in 2021, this is during the pandemic, right? So we're seeing different things happen here. So in 2021, they had different age range of what would be who would be eligible for this credit. So you can see the different amounts here. And it was fully refundable. So a lot of people, you had one dependent, they're age 5, you were getting about $3,600, right? And that's just a child tax credit. Whereas 2022, that's when I call it to be a back to normal type of year, right? So we're seeing that we now are back to normal with our refundable portion versus our non-refundable, and we're back to the actual max amount of this credit. Okay, whereas for 2023, the max amount is still the same, but what they've done is shift the refundable amount versus the non-refundable. So for 2023, you're just receiving $100 extra in refundable and $100 less in non-refundable, right? So I just want you guys to see this difference here of why your refunds don't look the same. The pandemic just birthed a lot of higher credits, if you will. So right now we're pretty much back to normal. Okay, so that's it with the child tax credit. So I want us to talk about what if you're not eligible for the child tax credit? What would you do under those circumstances? Right? So there is another credit called credit for other dependent. Typically, folks who are not eligible for the child tax credit, this is the credit that they would claim afterwards. Now, for example, if your child, again, they turned 17 last year, they won't be eligible for the child tax credit anymore, but instead the credit for other dependent, right? And then if, for example, your dependent don't have a social security number, but they have an ITIN, they wouldn't be eligible for the child tax credit, but they would be eligible for the credit for other dependent. And let's say that child is not related to you, but it's maybe a friend that you've been taking care of. And of course, you want to be able to prove these things. I remember one year I had a question from someone that asked, well, I've been taking care of my boyfriend for the entire year. He's lived with me, I've, fed him and all these sorts of things. Can I claim it under those circumstances? As long as you can prove it, then yes, right? So if that person is not related to you, the child tax credit wouldn't be available for you, but the credit for other dependent would. Okay. Now, with the credit for other dependent, all requirements are the same as the child tax credit, except for a few things, right? The credits, again, they don't have to be related to you, right? However, you have to prove that, hey, I've taken care of this person, rent, food, utilities, you name it, whatever you want to utilize, but it has to be something that you can substantiate. Okay. Now, this credit here is non-refundable, which means, again, you can't receive that in the form of a refund, even though it can help to produce a refund and or reduce your tax liability. Now, in contrast to the child tax credit that's worth up to $2,000, this credit is only worth $500. So usually maybe your child went off to college, you're able to get this credit, right? But not the child tax credit. Okay. Now, if you're single, if you're head of household, then again, this credit here, it phases out after 200,000. Whereas if you're married, filing joint, it phases out after 400,000. Okay, so that covers it for the credit, the credit for other dependents. All right, so what we'll do is talk about this final credit, and this too has experienced dramatic changes, if you will, and we'll talk about that in just a second. But the credit, the child and dependent care credit, that credit there is issued to folks who have incurred expenses for childcare, daycare, maybe summer camp, or your elderly parent who you have home care services for, right? So that's generally the folks that are eligible for this, but they do have one little stipulation in there. In order for you to get this credit, you have to have been seeking work or actually working and not really having the time to take care of that individual or give them the care that they need. So you hired someone to do it. Again, whether that's an actual daycare facility or you've hired someone to come from time to time and just keep an eye on that individual. Now, for the child, they would need to be under age 13. If they are older, then they would have to had some sort of disability, and their income cannot be greater than $4,700. Okay. Now, again, if it's health care for maybe your elderly parent, your grandparent, whomever it is, this is also an eligible credit for you. Now, that individual needs to have lived with you for more than half of the year, right? You have to be able to substantiate all of these things. And this credit here, it's not as large as the child tax credit, but it has some credibility to it. Okay. Now, with this credit, you're limited to the amount of expenses that you can use in order to get the credit. Now, this credit is percentage based. So what that means is only a percentage of the expenses that you've incurred would be eligible to consider you for this credit, right? So if you were, let's say, it's one child that you have claimed on your tax return that went to childcare, the max amount of expenses would be $3,000. So if you incurred $4,000, they don't care about that. That's just been lost. Any excess would be obsolete. They base it just on 3,000 or less. Okay. And if it was 2 or more children, then it would be $6,000. And again, if you had 5 children, the max is still 6,000. If you incur 20,000, it's still 6,000. Okay. Now the percentage ranges from 20 to 35%, and that really is based on your adjusted gross income. All right. Now, generally, if you choose to use the married filing separate status, then you may not be eligible for this credit. This credit, if you're using that filing status, would need to meet certain exception in order for you to be eligible for it. All right. And an example of that would be you didn't live with your spouse for the last 6 months of the prior tax year. Okay. Now, let's talk about what happens if your employer actually gave you some dependent care benefits, right? So a lot of times employers do that, and they have a max amount that they can give to you as an employee of $5,000. So when they give you that $5,000, it takes into consideration everything, right? Because if you incurred, let's say $7,000 and they gave you $5,000, then for the credit, only $2,000 would be considered. So when we take into consideration that $5,000 limit versus the expenses that you incurred, we have to make adjustments accordingly. And if for any reason there's an excess, so for example, if you incurred, let's say, $4,000 in childcare expenses, but your employer ended up giving you $5,000. Now you have an excess of $1,000. At that point, you wouldn't be eligible for the child tax credit anymore because you receive funds to cover childcare. Okay. Now the excess would be counted back to you as taxable income, a part of your wages, right? So what you want to consider is these expenses that you've incurred as a result of your child or your elderly parent going to a facility or a child care center. You wouldn't have been reimbursed for it. So if you were reimbursed, which is what this dependent care benefit is, then you wouldn't be able to count those expenses that you're reimbursed for, because that would be double dipping. Okay. It's also important to note that this credit is non-refundable. All right. And back to my little chart here so that we can understand a couple of changes. Now I do have here 2021 versus 22 and 23. Again, last year was the first year that folks started seeing their normal refund, if you will, because of the changes from the pandemic. And 2023, we're still in that normal range, right? So 2021, they pretty much heightened everything. It became fully refundable. The amount of expenses that were considered increased. The credit itself was at 50% at the highest and then 20% at the lowest. Right. So we're looking at a whole bunch of different changes versus 2022 and 2023, which is the current year we're talking about. They dropped it drastically. Right. We're still at the 20% being the lowest, but we then have 35% being the highest now versus 50% back in 2021. So you can see here, for example, under 2021, if you had one dependent, the credit that you can get was $4,000. Right, versus 2023, it's $1,050 at its highest, right? And the lowest for 2023, $600 versus 2021, $1,600. So you can see here why your refund looks a lot different than what it looked like, say, in 2021 or maybe even 2020, right? So it's not really your tax professional's fault. It's the adjustments that they made in Congress, the inflation, the up and down. That's what's caused this. Because I've had folks, baffled by the change in their refund year over year, but we're back to, again, somewhat of a normal process, if you will. So you can expect your refund to remain the same moving forward, or if there are any changes in terms of your income, your child's age, the expenses that you incurred for, the child independent care credit, those things will determine what your refund looks like. So if there are any changes, that's what you can expect. Okay. And as I mentioned, the other piece to the child-related tax credit would be the earned income tax credit. But again, we talked about that last week. So if you haven't seen that video, definitely go ahead and check it out to make sure that you understand how that works. Now, if you are claiming the child tax credit or the earned income tax credit on your tax return and you're due a refund, they should start releasing those refunds by the end of this month. So you can always check the IRS's website, Where's My Refund, to see what the status is, because by law, they're not able to process or really issue any refund until closer to the end of February and typically early March, right? So you just want to make sure that you're keeping that in mind, just in case you're waiting for your refund to come. Okay. Now that concludes it for this week's tax tip Tuesday live video. I know it was heavy. It was a lot, but just want you all to understand why your refunds may have changed and what the eligibility are for, the child tax credit, the credit for other dependent, and the child independent care credit, because these are the credit that oftentimes boost or increase a parent's refund, right? So you want to make sure that you're keeping in mind these eligibility, the credit amounts, whether they're refundable versus non-refundable. But it was such a pleasure hanging out with you all. I'll see you all in another Tax Tip Tuesday live video. That's all for now.